is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Zhang, an investor with one foot firmly in the technical world and the other in venture capital. She is the founder and managing partner of Fusion Fund, a fund based in the heart of Silicon Valley that specializes in backing early companies with technology that's difficult to copy, the kind of startup that isn't built on a good idea alone, but on heavy engineering, research, and execution. Lou is an investor with a strong technical background experience bringing technologies to market with a clear focus on areas such as AI applied to healthcare, enterprise software, networking, edge computing, and data privacy. Lou, thank you for joining us.
Thank you, Martin, for having me.
So where are you calling from today?
Yeah, I'm calling from my office in downtown Palo Alto. This is our headquarters, and also this is the heart of the Silicon Valley.
Great. Well, tell us your vision, behind launching Fusion Fund, and how did your background in deep tech help with the investment thesis?
Yeah, happy to share. So I was originally from a place called Inner Mongolia, so came to this country in 2010 for my graduate school study. So my journey in Silicon Valley started as a PhD student at Stanford and in material science engineering. While I was doing my research, that's also when I found a chance to not only just focus on academia innovation, but also commercialization of some creative technology. So I became an entrepreneur the second year, eventually launched my own company and eventually sold my company. So that's a journey of from the technology owner, academia researcher to entrepreneur. That's also the journey start to make me think about, innovation is my passion, how to best support and enable innovation in the future. And while I was entrepreneur, I got a chance to work with many venture capitalists, many investors. So I got to see that if you do things right as a VC, you can really supercharge the growth of the startup journey. And it's a very powerful catalyst. But on the other side, back in 2014, 2015, when I sold my company, there are not too many of the VC have very strong, deep technical background, especially for AI, healthcare, and also deep tech in general. On the other side, when I engage with so many founder friends, I saw, founder are the one making things happen. And I see many of them are focused on next generation of fundamental tech innovation, tech application innovation, powered by AI, healthcare, deep tech. That's kind of my initial motivation. I did some angel investing myself with my personal money, got very lucky. Out of 12 companies, I got 4 IPOs so far. So that's when I realized, okay, I can become a venture capitalist and investor to really build up a portfolio to amplify more innovation with my background, with my thesis, and also my strong passion vision for the tech innovation. So 2015, that's when I launched Fusion Fund. In the past 10, 11 years, we have over $500 million annual management, invest over 90 companies, have many company grow from the early stage to the IPO, pre-IPO stage, and also been working closely founder as an investor, board member, and also supporter. So the sector focus has been pretty consistent. From the fund one, it's enterprise AI, healthcare AI, and industry automation. So you can see all the founder we're working with, they're technology savvy. Business model is B2B. They're trying to solve the big problem for industry and also large enterprise. And also we want to supercharge them with accelerated go-to-market.
So what do you look for when evaluating highly technical founding teams and deep tech technologies?
Lots of the people are always assuming early stage investment is easy. It's like you met someone, you like it, and you invest. But for the sector we're focusing on, having the right extraordinary founder is important, but it's not the only thing really matters. And before we evaluate the technology, number one thing we evaluate is really the market size and market timing. On one side, the market size needs to be big enough. And for market timing, that's even a more tricky question to ask because sometimes you feel like technology is ready, but doesn't mean the market is ready to take it. Whether their target customer, the large player, the corporation have the budget ready to go, whether their infrastructure is okay to integrate new solution. For example, we have AI for over 20 years. Why now? It's really because the market timing is here and all these major players are ready to integrate with AI. So that's a key thing. So we do a lot of work, understand the market trend, understand the market timing. We also build up a network of a CXO network with a 45 CTO from Global 1000 companies since 2018. One of the partners joining me in Fund 2 was a former global CTO of HP. So we kind of leverage that resources to better understand the market timing. Then on top of that, of course, is the technology. Technology, you mentioned about deep tech. Of course, we have lots of work really focused on the technology due diligence and need to verify the technology works and technology is valid and also have strong differentiation and defensibility. But on the other side, it's not the only that you need the best tech in the market. Sometimes what you're really looking for is a better, faster, cheaper. Technology solution is better, faster, and also cheaper in terms of the cost of the tech and also the cost of the integration with the customer. So that's all the thing we cover during the technical due diligence. Not only me, the team I built it up, everyone has strong technical background, have a strong industry experience. We're able to conduct all the deep due diligence on the technical side in-house.
So how do you distinguish durable AI platforms from short-term applications in today's very crowded market?
Yeah, you're so right. I was always joking the signal noise ratio is really low right now for the market.
Yeah.
There's so many noise out there. There's so many companies, and especially for AI company. The good thing is the entry point is relatively low. You can just do a wrapper, sit on top of a Cloud API, build application. But you're also right, how to build a sustainable business. And also company have a strong differentiation, be able to become a sizable opportunity in the market. So for us, of course, AI capability is important in regardless whether it's the model architecture or AI capability itself. Yes, we'll look at it. But more importantly, we're really focusing on the layer of the data. For a company who will talk about, okay, we're building a vertical AI application, I will ask the questions. Number one, do you have access to unique high quality data? Now, compared with 2 years ago, the quality of the data matters more than the quantity of the data. In order to doing fine-tuning of the AI solution and also reduce hallucination, accuracy, and also maintain the low cost, reduce the cost, quality of the data really matters. So if a founder be able to access to a unique high-quality data set, build up their own data library, curation of the data, that's a big advantages. Sometimes for a certain vertical application, for example, you want to build a vertical application for healthcare, for insurance, for financial industry, the high quality data owned by the large corporate. So if a founder have a track record of connection to build up the partnership to access to that data, build up their own data library, that will consider as a unique access of high quality data. On top of that, second thing we're really looking for is whether founder have the knowledge of knowing how to build up the architecture of the AI application they're launching to optimize the performance and also the cost. How to reduce the GPU consumption, energy consumption. For many vertical AI application, you cannot require your customer to upload everything to the cloud. That's very different from consumer app. And some industry are highly regulated. So they may prefer solution can be deployed at a private network or even deploy on the edge. Then that's come back to the architecture design of this AI solution founder are launching. The last piece is really just the domain knowledge of the industry. We go back to the fine-tuning, giving the real-life feedback very quickly for fine-tuning and be able to further optimize the performance, especially for enterprise domain vertical application. There's a very low tolerance on hallucination. And if you're building a vertical application for pharmaceutical industry, no, you have to be accurate. So how to fine-tune the performance and based on industry domain knowledge, that's really important too. Last piece is, go to market corporate sales. Does founder know how to do corporate sales? Regardless how much we discuss about AI agent, automation, you still have to understand how to engage, connect with the end customer and push the contract multi-year partnership move forward as efficient as possible. So that's the thing we're looking for. So for AI company, if someone just came in saying that have a best model in the market, we may not really buy into that. The thing is there are lots of the model available in the open source community. So a smart founder always leverage the open source and doing the fine-tuning layer themselves and leverage their own data library.
Great. So how does the Fusion Fund work with hands-on with portfolio companies, from technology validation all the way through go to market?
Yeah, so we're a group of women entrepreneurs. So I think we do have a really good knowledge about what founder really need and at the initial stage to go through the early stage life cycle. So I would say a couple aspects would be helping founder. Number one is capital including revenue and also fundraising. So we have this network I mentioned, the Fusion CXO network, with all this 45 CTO from Global 1000 company who are the direct decision maker, who also are the one control the budget to really give contract to the startup company who they want to integrate. So we have this resources and network directly connect the founder with the key decision maker. They can go through the corporate sales cycle much faster. That's the reason many founders really prefer to work with us at early stage. It's not only about the revenue, it's also about market validation and feedback. And another aspect of the capital is really just fundraising. When founders think about start fundraising, we will share our internal training material, our resources, help them in terms of strategy, how to run an effective fundraising process. We have the training material, which we curate internally. I actually give that talk on how to do effective fundraising a couple times in different conferences, including the NVIDIA GTC conference last year. It's a very popular one. And meanwhile, we help them structure the round and also make sure the dilution, everything is in a good place. So that's on the capital side. Second part we really help founder is talent, access to the top talent. When they want to recruit people, we have all this high quality recruiter agency work with. We can introduce them. If you want to recruit international talents from Canada, from other places, Latin American, we have resources help them to do it in a cheap way. And also, if founder want to recruit high quality advisor, independent board, our key executives, we have another community called Fusion Expert Network, which I launched in 2019. Now we have over 50 members there. Most of them are head of AI, head of innovation from the large corporate player, and they're passionate about working with the startup. We get together with them every quarter, and they also got a chance to be an advisor, independent board for our startup company. So that's another thing we can offer to our founder on the people side. The last part is really, exit. Any startup company eventually want to think about the liquidity exit and merge acquisition IPO. For the sector, we've been investing. Majority of the company going to exit through M&A. So we also have an internal training material called how to manage the M&A process. We always frequently got merge acquisition offer for our portfolio companies, so we can help founder navigate the process, optimize the price. That's what we've been doing in the past. We have the training material, we have the experience, we have the connection. We can help them optimize. IPO, of course, we also help founder pick the best banker, strategy, auditing partner, and go from there. And last but not least is really when we serve as a board member. We not only just be in governance and also be a sound board member for founder, we also have the internal training material called how to structure and manage your board, share with founder to really teach them. You'll be surprised most of founder didn't think through it. I was talking with them, choosing a board member is as serious as you finding your life partner to get married. And same consequences, if things didn't work out, divorce going to be very expensive. So we also help them structure the board, think about the progression of the board along the different fundraising round. That's another thing are very popular. So you can tell we curate lots of internal resources for founder and make sure it's kind of like a Vegas buffet. We have everything served there, and the founder can come in, pick and choose whatever they like.
Great. So what are some of the common challenges deep tech startups face when they're moving from the lab to the market? And how do investors help?
That's a really good question. Number one is moving from the research to production. Really, number one is really understanding the different requirement criteria when you're looking at production-ready product versus a research product. Go back to what I mentioned earlier, better, faster, cheaper. Sometimes when technical founder working on the deep tech solution in the lab, they want to achieve the best ever performance. But coming to the production line, you have to consider practically how to the cost control and also the production efficiency, yield ratio, in order to compromise a little bit to get things done. Then it's better than perfect. So I feel that's something that founder have to feel comfortable with and be able to quickly adapt their status from the researcher to the production ready company. And the second thing on top of that is really finding the right production partner, especially for some deep tech hardware company. Be able to build up early partnership will be really helpful. Otherwise, that will be very capital intensive for them to try to build it themselves. And I feel the last piece is really about go-to-market. go-to-market piece is not only about building up the sales team, is eventually understand what customer really care. For example, you're providing a AI infrastructure solution to the customer. But the customer probably not only want to optimize their AI info, they also want to make sure there's a governance layer on top of it, want to make sure they don't have any compliance risk. Then do you also bundle with a feature to make sure they have no security concern, data privacy concern, how to make sure not only deploy your AI solution, but deploy secure AI with your customer. So that's all the understanding need to be bring back from conversation with customer and build it into your product offering and go from there to doing initial go-to-market.
Great. So what's your perspective on increasing diversity among founders and investors? And why does this matter for innovation outcomes?
Of course, I'm a bigger promoter and supporter to increasing diversity in the venture industry, in the overall innovation ecosystem. I truly believe diversity is critical for innovation. We all know Silicon Valley is the heart and center of innovation. Why? If you come over here, you will find out 40-50% of the local residents are first generation immigrant like me. People came here with different culture, different background, and different idea. This is the beauty of it. When you have so many people think outside the box or bring different opinion, idea, and also technology, that's when innovation happen. So I feel continue to really facilitate the diversity angle of innovation ecosystem is really, really important. Of course, there's also lots of discussion about not only minority, but also female. I was a female entrepreneur, I'm a female fund manager. We need to realize, this world have 50% of population are women. That's a huge market. And also, if you have more diverse the team in no matter venture side, even the startup team, the performance is always better. So I was always talking to my peers. I'm like, when you promote diversity, it's not just for the social impact. It's for better business result. As an investor, our goal is to optimize the financial return. So diversity gonna help us optimize the financial return. So we should support it and make it happen.
Well, how does international talent and research ecosystems factor into Fusion Fund's sourcing and investment strategy? Where are you finding the best results?
Yeah, I feel the beauty and the benefit of Silicon Valley is it's like a small United Nation. We have talents across the whole world. That's the beauty of America, that including myself, US built up this amazing business ecosystem and also innovation ecosystem, attract the best talents across the world, come to Silicon Valley and the US to launch their startup and also push forward with the hypergrowth of the business. So I think the global talent is an important contributor to the innovation US, especially in the concept of the AI, in the discussion of the AI. You can see many of the top AI research papers are published by Global Research Institute Global Talents. So we are seeing a lot of great founders from Europe, from Canada, from Israel, from Asia. For example, we work closely with Mila Institute from Montreal. They're amazing AI talent center, Toronto as well, and the Cambridge ecosystem in London. There are many outstanding British founder, and also there's a really strong DeepMind ecosystem in UK as well. German founder ecosystem is very strong. I just had a lunch with one of our new investment. It's an Israeli founder. And there's a very strong and dynamic Israeli founder ecosystem in the United States, and especially focused on security. Not only in Silicon Valley, I was in Austin. There's a big group of Israeli founder in Texas as well. So I think international talent is very important. We definitely continue wanting to leverage our channel there to bring the best talent and technology to Silicon Valley.
Great. So how does data analytics and technical diligence shape your investment decisions? What role do they play?
Data is very critical. We are very focused on data never lie. That's another thing. We do a lot of data analytical on the market side, the market timing. And meanwhile, we also try to be smart, like do the right thing in a smart way, leverage AI with the data, our internal data points, external data points to help us make better decision. One thing I do want to highlight, we have an AI analyst, Ada, since 2018. Ada is named after Ada Lovelace, the first ever programmer we have in the human history, also is a woman. So we have her since 2018. We've been calling the API of our portfolio company and feeding Ada with our internal data, build up different feature and also functionality that supercharge the workflow and efficiency internally. So by the end of last year, Ada been with us for a couple of years. So my partner, David Gerster, who is also the partner really focused on enterprise AI, told me, oh, we should give a promotion to Ada because Ada has so many new features we launched last year. So Ada got promoted from analyst to senior analyst by December last year. So which means Ada may have a partner track in the future, depends on how much more data approach and AI capability we can enable her.
So tell me about the sectors and technologies you think are currently underappreciated, but are poised for major impact.
Healthcare AI. I'm very passionate about healthcare AI since day one. Healthcare AI is always roughly 30% of our portfolio. And a couple of numbers to share with everyone. First, everyone probably know 20% US GDP is in healthcare sector. On the other side, if you look at the total data we have in the human society, actually 30% of the data we have are healthcare related. But you guess how much we utilize so far? Less than 5%. That's very little. And think about what I mentioned earlier on, the quality of the data matters more than the quantity of the data. And the healthcare sector naturally have huge amount of high quality data and very diverse the use cases and data set. So that's kind of a golden mine for AI to show the AI capability to build a different type of vertical model. So we've been investing in company building like vertical AI model for cell therapy, for vertical AI for MR sequencing data, for digital therapeutic solution for dementia, Alzheimer, for Parkinson, digital treatment for depression. This is all the opportunity coming up right now. It's not only just, doing the early diagnostic. It's about doing the digital therapeutics, help us solve the problem, eventually improve the quality of life. And we always talk about the future of the healthcare need to be personalized. We have to do standardized the treatment and healthcare service because the cost, because of the access. Now AI can enable us to really do personalized the healthcare solution service providing and also personalized treatment, personalized diagnostic. That's really an upcoming trend. You probably heard the major partnership announced by Eli Lilly and NVIDIA in mid-January. That's also a strong signal that even large pharma company, they integrate AI, leverage their data, and work with the innovation ecosystem like us.
Right. And what should first-time founders know before raising capital from institutional investors?
Yeah, of course, there's a lot of things they should really think it through before raising money. First thing is really who to raise from, because many first-time founder didn't really do research on investor. Finding the right investor, understand what they're building, have the track record, and also really be able to help them grow from 0 to 1 is important. So do the research on investor before just randomly reach out. Second thing is the timing of raising and when to raise. You can raise at very early beginning, but if you want to raise from institutional VC, it's better to figure out your product market fit before talking to institutional VC. You can be pre-revenue, but product market fit is important. Last thing, first-time founder, I was wondering, okay, how much we need to raise and then what is the valuation? One thing I always suggest to founder is you should think about how much dilution you are willing to take. 10%, 20%, that should be the metrics. Number really matters, not the valuation. It's about how much dilution. And then top of that, think about the milestone you want to achieve after this fundraising. For example, you're saying that after raising this round, within a year, I want to achieve $1 or $2 million revenue. Then kind of engineering back, okay, in order to achieve this $2 million revenue, then how much resources we have, a team I need to build up, how much money I need. Then come back to, okay, this is probably $3 million I need to raise. Then what is the valuation? Okay, I don't want to have more than 20% of dilution. That's the very structured way to think about round size and also the valuation and also who to work with.
Great. Well, the last few minutes that we have here today, what else should we cover that we haven't?
No, I think you have all the good questions. And yeah, I think it's a great time for founder to do an innovation startup. And it's a great time to really launch the startup and working with VC. So please feel free to reach out to us if anyone's listened to the podcast and doing innovation in enterprise AI, healthcare AI, and the industry automation. We would love to engage with founder.
And how best for entrepreneurs to get back in touch with you?
Yeah, you can either reach out to me on LinkedIn or maybe just email me at lou@fusionfund.com.
Great. We'll put your contact details in the show notes. I want to thank you for joining us today, and we hope to have you back for a follow-up soon.
Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.